Hi everyone, welcome to my Easy Trade educational channel. My name is Chuck Young. Today is March 29th, 2023. In Wall Street, there is a saying, follow the trend, or the trend is your friend. Notice the word used is follow, not predict. I think most people heard of this rule, and many people know this rule. However, how many people actually follow this rule and actually do it? Perhaps not many. Even myself, from time to time, forget to stick to this rule and make a trade against the trend. More often than not, I end up regretting it. 2 weeks ago, on March 15th, I made a video and shared on YouTube. Based on my 20 years of trading experience, I concluded that QQQ's double bottom formation is still valid, and QQQ has higher probability of going up because of the W bottom. So in the time frame of a few days to weeks, the trend is in the upward direction. So I did make some long trades in the upward direction. Only a day later, on March 16th, I made the mistake of selling short on NASDAQ futures. The mistake was that I let the short-term noise override my longer-term analysis and went against the longer-term upward trend. So, on the March 15th, when it gets to this point, I've already concluded the trend is in the upward direction. Okay, but then in here, because of this, it looks like it's going down. It looks like it's going down. Okay, so actually, I sold short here. Thinking it might just correct to the white line. Okay, obviously, after I already concluded the longer time frame trend is in upward direction, normally we should not go against the trend. We should only trade in the direction of the trend. Okay, so I sold short here and then quickly started losing. And then even at this point, once it get here, I still was hoping that it can drop somewhat and then I can get out. Okay, but it just keep on going up. Fortunately, what saved me is that I took the loss. I took the loss somewhere here. Okay. Not only did I take the loss, but also I reversed the position and went long. Okay. And that going long actually with the initial long position and then add to the position, and then that was a trade that saved me for the next few days. Otherwise, I will be in a terrible shape if I go against the trend. Okay, so now this is what happened afterwards. So normally the role to follow the trend, and I believe it, and I would attempt to follow it. Okay, although occasionally I may get confused and then then make a mistake, and that's the kind of mistake I should try to do my best to be more disciplined and avoid that kind of mistake in the future. All right. So now you see the NASDAQ has been up and up. All right. So follow the trend. That's easier said than done. If one can have the discipline to stick with this principle, he will be rewarded hugely in the long run. The challenge is market noise. We must filter out market noise. That is why trend line, channels, moving average, etc. are created in order to help identify the trend, filter out noise, and follow the trend. Everything has a time frame. All technical analysis should be done with respect to the particular time frame we're trying to trade. And my trading time frame is a few days to a few weeks, depending on how long the trend can last. Sometimes the trend will last 2 or 3 days and change its direction. And sometimes the trend will last for a month before it changes direction. Since my time frame is a few days to a few weeks, intraday movements and counter-trend movements for 1 or 2 days are typically considered as noise, and I try not to react to those noises. Because we need to filter out noise and not respond to noise, by the very nature of filtering, we are slightly lagging behind. We will never say, now is the market top, or now it's the market bottom. We are slightly lagging. We try to identify the start of a new trend as early as possible, but we should not go too early and start predicting. So we do not try to anticipate and predict the future. We will never say the market will go to this price level in 3 weeks, or the market will crash to here in 3 months. That's prediction. And more often than not, those kind of predictions are wrong. Fundamental analysis versus technical analysis. In my opinion, fundamental analysis is more suitable for very long-term investment, and that's not easy. The master of fundamental analysis is Warren Buffett. Fundamental analysis for me is very difficult. You see, Cassie Wood's ARK funds, they have a team of professionals doing fundamental analysis. Even they cannot even do it right. How the hell can I figure out the fundamentals? Sometimes fundamentals look good, but stock keeps declining. And sometimes fundamentals look not so good, but stock keeps on rising. So my focus is on technical analysis. In my opinion, the fundamental factors are already considered by the institutions and by the big guys. And they have considered all these factors and decide to buy or sell the stock already. So the fundamental factors are already reflected in the price and volume of stock. So I focus on technical analysis. Identify the start of a new trend as early as possible. Then initiate trade in the direction of the trend and just follow the trend until the trend direction changes. Now let's take a look at some of the charts and share my views. Two things that I've been focusing on in the past week or so. One is Bitcoin, and the other is NASDAQ 100, QQQ, or the NASDAQ futures. So far, QQQ has been going as I have predicted. And I will not call it prediction. I'm just following the trend. All right. So the trend, the uptrend, and the moving average are in the bullish formation. So I just follow it. Okay. So by the trend following principle, it's supposed to go up. Okay. The only thing is the overhead resistance of the QQQ. All right. So it depends on where we draw the resistance. We draw the resistance at the high of February. So far, we have not broken through it yet. Okay. But quite often, if we look at the closing only chart, Wednesday's price already broken out. It's higher than the February close. Okay. So this is a good indication. So that means from a perspective of closing price, we're already breaking out. Okay. So hopefully, and tomorrow, or Thursday. Hopefully it's Thursday, and it will continue. If Thursday continues, it will completely break out the high, take out the high of February. Okay, and even if Thursday does not, I did not anticipate to go up so quickly. I would prefer to say that this goes sideways, slowly up. As I said in my last video, if this goes slowly up, then the chances of breaking above the resistance will be increased. Okay, and if we go up too quickly, and then there will be sellers coming in, and then it will cause it to go down. Okay, so if we go slowly, and then the moving average keeping up, and then it will go over it. Okay, so I think the chances of go over it is higher now. Previously, I said it's 60% chance. Okay, I think it's probably higher than that. So QQQ is doing as we expected. We're not trying to be smart. We just follow the trend. Okay, so now imagine if this breaks through and then the big bull run continues. What happens to those people who keep on telling the bear market, we're in the bear market? You're using fundamentals. Oh, fundamentals are so bad. The bank's problem, this problem, interest rate, and tons of factors. The market should crash. Okay, instead, the market keeps going up. So what would they do? When would they admit their mistake? Okay, I will admit my mistake very quickly when this reverse. Okay, we cannot be 100% right. The moment this reverses, I immediately get out and reverse my trading. Okay, because I'm trend following. Okay, I don't have a stubborn mind to assume or to predict which way it will go. Okay, we're just following it. All right, so this is QQQ. For S&P, particular SPY, let's take a look at our analysis 4 trading days ago. Now S&P. This is a chart for SPY. As far as its trend goes, it depends on how one looks at it. One may say, well, in the time frame of the past 2 months, it has lower lows and lower highs, and it's in the downtrend. One could also argue that in the time frame of the past 5 months, it could still be in this upward channel. On this day, it did broke down the lower edge of the channel intraday, but it came inside the channel at market close. This channel is drawn by starting with the upper channel lines first and use that as the basis, then draw the parallel line down here. Even if it could still be considered in a, quote, upward trend, end quote, in this context, the short-term trend is down and pretty bad. That was what we analyzed 4 trading days ago. Here's the situation now. 4 trading days ago, we were here. Okay, so it's not clear because the near-term trend was still down. Okay, however, I did indicate that this longer term, this 5 months trend, okay, in a channel. So it looks like this 5 months trend channel now is confirmed. So now the Wednesday's market action is such that the SPY has broken out the downtrend line here. The near-term downtrend line has been broken. So in my opinion, now S&P has it's in an uptrend now, beginning of an uptrend now. Okay. Again, as I said earlier, we don't want to predict ahead of time. We follow. Okay. We don't try to predict here, trying to catch the bottom. That's not our approach. Okay. Our approach is wait until the trend has direction has emerged. Okay. So in my opinion, now the direction has turned up because it has broken through this downtrend line. All right. So then moving forward, every dip can be bought. Anytime it dips, okay, even if it dips down here, below this line, it can be bought. Okay, because today it broke through, that means this downtrend line has been successfully challenged. The trend has turned up. So now, if we're going to trade S&P, we're in a buy on dip mode now. Okay, again, this is trend following. We're not predicting. We're not trying to catch the bottom. Okay, we wait until the trend has emerged, and then we start to get in, buy on dip. Okay, and also if we look at the S&P's the weekly chart, here's the S&P weekly chart. I don't see it's very likely S&P would Friday will close much lower. Okay, so if it can roughly maintain here or go higher, that means that this weekly chart we also have a green candle, and it has broken through this middle line. Okay, of the Bollinger Band. The yellow middle line is the Bollinger Band. Okay, so if that's the case, then it's bullish. Okay, every time when it passes through you see here, it passed through the middle Bollinger Band area, it will continue. Okay, here we pass through this. Last week it didn't close above it. It went over above it, and then at Friday's close, it went below. Okay, and this week, we can close above it. So if we're not losing ground on Thursday and Friday's trading, if this can be green, then that means it will go up. Okay, it will perhaps challenge this upper line, which is roughly for 414-ish, roughly 414-ish. Okay, so that will be the next target. If we look at the weekly chart, 414 is roughly here. Okay, which kind of more or less slightly lower than the previous high, but that will be the first target. All right. So again, we're trying to follow the trend once the new trend emerge. So we're going to catch this part of the move. Okay, we'll try to catch this part of the move. We never intend to catch the bottom fishing. Bottom fishing is not our approach, because who knows, when it's gone, it could come here and it could drop down. Okay, so we will not try to predict too early. We wait until the trend line is broken through. Now it has happened on Wednesday. Also, SPY's chart with closing only. All right. So again, we have an obvious uptrend channel, which we draw 4 trading days ago. Okay, and then this is a near-term downtrend line. It's broken. All right, broken through the near-term down. So it had broken so many. It broken through the near-term downtrend line. It also climbed above the 50-day moving average. Okay, so this is a 50-day moving average. Okay, and then it's above the 100-day moving average. The pink line, 100-day moving average, is above that. The yellow is the 200-day moving average. So it's above all the major moving averages. All right. So as it stands here, I think the trend has turned. S&P has turned up. Okay. So the 5 months long-term trend is up. Okay. So recently had a short-term correction. Now in the short term has turned up. All right. So this is S&P. The Dow Jones, okay, DIA. Since we look at the closing only price for S&P, now let's just continue with the same screen. We change to Dow Jones, DIA. Okay. Yeah, this is not as good as S&P, because S&P, at least you have a 5 months upward channel. This Dow Jones doesn't have that. Okay. If there's any channel we can draw, it's still downward. Okay. But the good thing is that it has broken through this downtrend line. The near-term downtrend line, it has broken through. Okay. And also yellow, it now has managed to stay above the 200-day moving average, which is the yellow line. Okay. 200-day moving average is above, broken through downtrend. Okay, and also the this is the Bollinger Band, and so it's above the 20-day. It's above the 20-day moving average. Okay, so the target, the next target will be the upper end of the Bollinger Band, about 333. Okay, 333 will be the next target. Oh, actually, you first have to get through this 50-day moving average. 50-day moving average is roughly 331. Okay, you got to get through the 50-day moving average first, and then the Bollinger Band. All right, so let's look at the weekly chart. We did mention this in our yesterday's video. Okay, weekly chart. Everything else looked bad. This chart is difficult to see what's going on. It has too many things going on. It will be difficult to see. So yesterday was below the 50-day EMA, below the 26-day EMA, below everything. Okay. Now even it's climb above. This is too busy. So, but if we look at that closing only, we have a clearer picture. But also yesterday we did mention that this weekly Bollinger Band. I mentioned that it got some support here. Okay, so if Thursday and Friday and Dow Jones average doesn't drop again, so we will have a nicely green weekly candle. Okay, and that's bullish, and then that means we will go toward the middle line, which is 333-ish. Okay, so very interesting. So the weekly chart, the middle line is 333-ish, and then on the daily chart, the Bollinger Band upper end is 333. Okay, so that means that 333 is very likely to be a major resistance. From a daily perspective of the upper end of the Bollinger Band, and to the weekly perspective of the midline of the Bollinger Band. Okay, 333. All right. Although overall trend is not as good as QQQ and S&P. QQQ is the best. S&P is the next. Now is the Dow Jones Industrial Average. Okay. And lastly, IWM. IWM, here is hard to see, but here again, the Bollinger Band, weekly Bollinger Band. All right, this looking good. If it doesn't Thursday and Friday, it doesn't go drop. That means we have a stabilized at the lower end of the Bollinger Band. Okay, and that's one positive thing. Let's take a look at the closing only and see if we can see anything. WM closing only, yes, closing only. Trend wise is not good. However, you see, we can consider this as a very long time oscillation. We could trade a trendy stock, or we could trade a oscillatory stock. Okay, so this can be traded as a oscillatory stock. If it's oscillation, then it manages to stabilize at this support. Okay, so now it has turned up. Okay, although this may have potential to go up, I still would not trade this. Okay, I still like QQQ better. Okay, this you can see here is struggled, and then go up here, and then started that up move. Okay, this looks like similar to here, and struggled for so many days, and then started to go up. Okay, but again, I would put my money on something that's more easy to make money, which is the QQQ, which I described in the past 2 weeks. Okay, I would put my money onto something that's more trendy and more forceful and easy to move. All right. So this is the IWM, or the Russell 2000 ETF. we'll go over quickly, very quickly, the fund stocks. Okay, actually, our decision to be bullish on QQQ largely depends on our analysis of the individual stocks. Okay, so that play an important role. So let's take a look at them again. XLK technology, boom, new high. Okay, new high. Follow the trend. Yeah, the moving averages are bullish formation. I'm not going to say any more about it. XLK and SMH semiconductor. Yeah, it's looking good, going up, although not new high yet, but it's going up. And FNGS, the founding ETF, also going up. Okay, and then some individual stocks, Apple. Yeah, closing on the closing basis is new high. Okay, and Microsoft. Yeah, it's doing good. And actually, Apple, I've been since it broke this neckline. Since it broke this neckline, okay, it's a inverted head and shoulder. I started adding to it. Okay, so actually, I think I bought the AAPU 1 half. Yeah, I bought this 1.5 times Apple. Yeah. So to have a little bit of leverage. Okay, Apple, Microsoft, Google. Google is a weak one. Has been struggling. Let's wait for one more day. So right here is 200 moving average. So if Google on Thursday goes a green bar, that's an entry. That will be an entry opportunity. So sometimes when the stock is kind of a little bit weak, it gives you a good entry chance. Let's just wait and see. Let's wait for Thursday to have a green bar, and then we'll get in. Facebook. Hi, Facebook. So if you've been long on this, you just ride the trend. This moving average have a bullish formation, never cross. So if you bought someone here, just hold on, and then you can ride all this way up. Okay. I don't know why some of those WeChat groups, people talking about the 1 day, 2 day trading all the time. But if we take a little bit longer perspective, we have a big, you can capture a big part of the profit. Okay. What else? Tesla. Yeah, Tesla again. It's a weak. Okay. So, but it's going sideways. I sold Tesla put spreads. Okay. So underneath 180 or 185 ish, I've been selling Tesla put spreads. Okay. What else? Nvidia. Well, that's you don't fight the trend. You don't fight the trend. Nvidia, okay. AMD, okay, a little bit weak, but it's okay. But it's okay. Actually, I do hold this Taiwan Semiconductor TSM. Okay, so this is also one of my holdings. Let's see, what else? Last one, Netflix. This one I have we have mentioned this day. Okay, the very day the double bottom is formed. I've mentioned this. Now it's kind of consolidate, sideways a little bit, and before it moves up. See the moving average now are starting to cross over. The moving average now are starting to cross over. So normally, moving average kind of thing is lagging. Is lagging. So sometimes it's worthwhile to wait for its crossover. But in some situations, if there are other factors that we can make an early decision, then we get in early without waiting for the moving average to cross. Okay. So Netflix is one of the example. I sold many put spreads. I sold many put spreads on Netflix. The day I mentioned this, on the video, and the next day I immediately started selling put spreads. Okay, so we're making good gains on this. Okay, I think that's all for today. Thank you for watching. See you next time.